COVID-19 and how financial firms thrive amidst disruptions. We are honored to have the panel of leading academics and industry leaders to share their latest research findings and candid insights with us. The first half of this event will be sharing discussion between our speakers and the moderator. If you have any questions, please save them for the Q&A session in the second half of the event at around 9:15 p.m. Hong Kong time and 8:15 a.m. Chicago time. Without further ado, let me introduce you our moderator today. We are thankful to have Mr. Benjamin Quinlan, CEO and Managing Partner of Quinlan and Associates, and also the Chairman of Fintech Association of Hong Kong, to moderate today's panel. Ben was named one of Latest 80's top 50 fintech influencers in Hong Kong in 2018. Prior to founding his own company, Ben was the head of strategy for Deutsche Bank AG's equities business in Asia Pacific. Good evening, Ben. Welcome. Thanks a lot for your support. Can you please wave your hands and say hello to our audiences from all over the world? I'll pass the floor to you now. Thank you.
There we go. Okay, I was just on mute. Thank you for taking me off mute for this. Thank you, Helen, for the introduction. Very much appreciate it. And thank you to everyone tonight for joining this very interesting panel where we're going to basically be looking at fintech in the post-COVID-19 era. So tonight we're going to be joined by four very prominent academics. By way of background, first academic we have on is Professor Casey Chan. Professor Chan is the chairman of Welab Bank and a senior advisor to Welab. He's also the adjunct professor and former dean of HKUST Business School. He was appointed as Secretary for Financial Services and Treasury of Hong Kong Government from 2007 to 2017. And prior to that, he was the Dean of HKUST Business School. Professor Chan specializes in asset pricing evaluation of trading strategies and market efficiency and has published numerous articles on these topics. The second panelist tonight is Professor He Zhiguo from Fuji Bank and Heller Professor of Finance and the Director of the Becker Friedman Center, China. He's also Faculty Co-Director of Farmer Miller Center at the University of Chicago Booth School of Business. His research focuses on financial markets and macroeconomics, and he's also an expert in fintech, especially around blockchain technology and its business applications. Our third panelist tonight is Mr. Alvin Klock. Alvin is the founder and CEO of OneDegree, one of the first virtual insurers in Hong Kong. And Alvin was JP Morgan's Asia Pacific Head of Emerging Technology and Taiwan Head of Research. He's also advised a number of global technology powerhouse and venture capital firms and served as a guest lecturer at various universities. He was also the co-founder and chief business officer at an augmented reality startup. And last but not least, we have Professor Tam Kyan, the Dean of HKUST Business School, Chair and Professor for the Department of Information Systems in Business and Statistics and Operations Management. So he's leading the school in major cross-disciplinary fintech research funded by Research Grants Council under the Hong Kong government. And Professor Tan's research focuses primarily on big data and e-commerce, and he's also been playing an active role in promoting academia business collaborations with startups. So thank you to all of our panelists for joining us, and I think we can crack off in these sessions. Right, so for those of you who've dialed in, you obviously know that we're in a funny period. This is literally my 11th Zoom call today. Obviously, COVID has fundamentally changed the way that we interact, that we do business, that we do commerce, and it's even permeating within the financial services industry. I think what you are seeing is a lot of debate out there is this a catalyst? Is this a new opportunity for fintech? despite all of what's going on with the global slowdown. So we wanted to really posit the question to our panelists to really say that COVID has obviously catalyzed this need to go digital, right? Everyone understands the need to be digital is actually almost fundamental to business success. How do you see the current environment in terms of fintech development opportunities amidst the backdrop of the economic climate that we're seeing right now? Maybe I can start off with Alvin. Would you like to share some views on this?
Sure. Thanks, Ben. Maybe let me start off with what is going on with the e-commerce marketplace first, and then we can go into talking about some of the sales figures, etc. Since COVID-19, the fastest growing segment globally for the transaction is actually e-commerce marketplace. The number that we see is about 80% growth globally for the e-commerce marketplace, and then followed by digital banking and insurance transaction. We are seeing about 40% growth based on some third-party figures. Now, the restrictions to shop on the street is really pushing the mass, even the more conservative people, to get on the e-commerce marketplace. But there's a fundamental trust issue to solve here. For example, can you return the product if you're not satisfied, given that you have never seen and touched the product? Is the service level guarantee? So this is not even talking about financial services. This is talking about the behavior and so on. So with that, how does it link to financial services, fintech? So what we see is that micro insurance through the digital channels are starting to sell really well. And that is not only for emerging markets, it is also happening in developed market. In fact, for us, OneDegree, we wrote out a logistic warranty product in the B2C marketplace in August, and that induced really substantial demand with that warranty product. And now, talking about the overall market, over the weekend, there was a SEMP article that interviewed the different traditional insurance companies and also the bank insurance. They are seeing anywhere from 5% year-on-year growth to doubling year-on-year growth in digital sales. However, if you look at among the several virtual insurers, this year, 1 quarter or even 1 month of volume would equate to the full year of volume of last year. This is the type of growth rate that we are seeing. Absolutely, the COVID situation is really changing the entire fintech scene out there.
Yeah, those are some pretty punchy numbers. So that's looking at the insurance space. I mean, you were also seeing the development, for those of you who are keeping up to date with press, of the virtual banks, for example. And Casey, given your background at Welab, maybe you want to share some perspectives. What is the kind of driving force behind what's going on in the VB space, and what opportunities do you see lying ahead?
Well, number one, I want to second what Alvin said about the digital advance. With COVID, I think a lot of people in Hong Kong and around Asia and around the region realizing that they don't have to go to the physical branch to do a banking transaction. Now they are totally online. So that's how digital we are becoming. Now, speaking of virtual bank, I think I want to point out that because a lot of audience today are from mainland China, they may not really understand why Hong Kong and some other places in Asia are talking about doing virtual banks. Mm-hmm. Let me give you some background. My personal view is that unlike mainland, when we talk about Hong Kong, Singapore, Malaysia, and some other countries, the banking areas in these countries are more or less quite, I would say, developed. Although they're not digital, they're quite developed, and they have a lot of regulation already in place. So when governments try to introduce competition to the banking field, introduce digital transformation, some of the existing financial institutions will be actually, making some changes within their existing system with a lot of legacy. So you can see that the advances is going to be very slow. So what the governments around Asia, and Hong Kong is taking the lead because Hong Kong really came out with virtual banking licenses ahead of some other countries here in Asia, is to try to introduce competition, by granting new licenses to what I would call challenger banks. If you use a word from European markets, new startup with fully regulated fully regulated banks, that would pose some challenges to the existing financial institutions. So I think that's the opportunity will be that the virtual banks in Hong Kong, they are fully regulated banks. They have the support, from the government in terms of regulation, in terms of deposit insurance, and they're competing with traditional banks in all full range of financial services. Of course, where they have to succeed against the traditional banks will be that they provide better customer experience in areas where the virtual banks, can connect better their products and the customers. And I think in some sense, that's what the fintech is promising. Fintech promises that by having the data, by having interaction with our customers, we know them better, we can give them better services. And that's where the virtual banks, should be competing.
Thank you. Our host has major control over my mute function on the microphone. Apologies. Thank you, Casey. I appreciate your comments regarding that. How about you, Kyan, Professor Kyan? Is there any view you have around the development of the VBs and the digital insurers in this space? Are you seeing similar trends, and what are the opportunities you see going forward?
Yeah, the business school just complete a study on the adoption of virtual banks and insurers in Hong Kong. In fact, we are going to print out copies of the report this week. So any audience, if you're interested, I would love to send you a copy. So I'd like to share with you some of the findings of the study. As some of you know, HKMA issued 8 virtual bank license last year. And the insurance authority so far issue 4 virtual insurance licenses. So the study basically would like to understand how the public perceive these virtual entries to the industry. So one question we asked them is, do you recognize virtual bank as compared with traditional banks, or virtual insurance company as compared with traditional insurers? To our surprise, actually, the public really recognize the virtual bank, at least the brand, and also the name. So 3/4 of the respondents to our survey, more than 2,000 altogether, actually recognize the virtual banks and also the virtual insurers. The adoption rate at this point is still low, understandably, because these new entries just to start to roll out their business. So we ask, how many of you actually a customer of virtual bank? About 6% at this point in time, and a little bit less for virtual insurance. We also asked them, what kind of products do you think virtual banks should offer? And one response, which is very interesting, is that virtual banks should offer crypto asset investment products. So this is really quite interesting for us. We expect maybe personal loan with a low interest rate and so on. But this is something maybe the virtual banks should consider. We also asked them whether you trust a virtual bank the same as the traditional bank. But still, most of them respond they trust the traditional banks more than the virtual entries at this point in time. Maybe one final comment I'd like to share with you is most of the respondents actually agree that the government should play a role in facilitating authentication of individual identity. Something like an EID will be very useful for the individual to authenticate themselves. So there are other findings that we'd like to share with you. We'll put all of them in the report. So if you're interested, just send us an email. We'll send you a copy later.
Yeah, interesting. No, I mean, it's great because I think a lot of people do have an understanding and visibility of who these new names are. But I think that what you call the usage rate or adoption rate of these new VBs and digital insurers, there's kind of a sticky mindset with a lot of people, right? And these things do take time. And going to what you were commenting on there, Do you need to compete like for like with the traditionals, or should you be doing something completely different that they wouldn't touch? Does that allow you to differentiate yourself? Very, very interesting points of, debate and feeding into strategy for these organizations. Zhiguo, just on this, open banking, I believe you had some other kind of thought processes around how this might tie into the overall opportunity set for fintech.
Yes. Thanks for the three experts previously talk about this issue, and I just like Ben's comment is really get to the point where the problem with open banking that from my reading all the things is that open banking started from UK almost like I would think 2 years. And the most of the report from the UK, as well as a little bit from the Hong Kong, is that the adoption rate is low. And if you ask people why, would you like to try, or why do you want to get on it? There's a little bit of a privacy. I don't know whether they really meant privacy or just just uncertainty. The second one is the network effect. The COVID really helps. A lot of times that I don't even know that actually I could perform my job without any interaction with the real people. I hate to give seminars to different universities, and then now I'm actually quite happy to do it and I feel like it's much easier. Okay, so all these things just telling you that maybe that we have to really understand that the banking it is. So I believe that the Casey Chen will agree with me that, we had a discussion several years ago. It's like banking is actually, if you think about it, you don't need to interact with people. It's a bunch of accounts that are properly recorded, make sure it's properly recorded and making sure that it's all, under good monitoring. And then the second layer is our information, right? And most of the time we think that interaction is really important is because of the information, because of all these soft, we call it soft information. You need to talk to people to gain it and therefore make very informative decisions. Nowadays, given the technology, probably it's the opposite. When you talk to people in person and they could say, they can deceive you, and then at some point they might say, because of the interaction of the physical, I forgot to bring something, all these things. With digital, it's just, this is the very, very strict ways to implement all these things, and it's much less way to fudge. So in that way that, COVID give you the convenience that you need to do this thing and realize that it's not that inconvenient to do. The second is that and the help of all these technology that it really put the supply as well the demand side on the open banking. So I'm actually quite positive on the I wouldn't say explosion, but the slowly adoption of the open banking. And I hope that in the next year when we come back to review the open banking, you'll see European growth rate as well as the Hong Kong growth rate that gets to the place.
Fantastic. Yeah, adoption is obviously a challenge, and I think that's weighed against the broader opportunity set that people are talking about. I think the reality is there are several challenges. Like fintech sounds fantastic, and moving to a tech-enabled model sounds well and good, but the realities of actually running a tech operation and a tech business is not so clear-cut. Alvin, given your position in sitting within one of these organizations, what are your views on the pain points of running a digital operation? And then how do you see a regulator playing a role here?
Yeah, well, I think there were a couple of mentions from Professor He about the adoption rate. And I think there's something that is extremely important to differentiate between the traditional agency, the physical branch model versus the digital model. So in a typical agent broker type of structure, what you usually see is that there's a huge volume uptake at the beginning if the product is good and the agency want to push the product. But then when it comes to digital, it's very, very different. It does take time to test and learn and to get up to the S-curve. Okay, and so what does it mean by that is that it does take a lot of product iteration, and initially there will be a lot of wastage with low conversion rates, but you just need to keep trying until you really hit the sweet spots that the consumers are really looking for. And this really requires to have a long-term vision and also a patient investment. Now, with regard to regulator here, since this is a highly regulated industry, the regulators obviously play a big role here. Now, with markets where regulators over-regulate things, like for example, I've seen markets that they even monitor how you charge the product, how you do your marketing, and then what the claim process is looking like. In those cases, the market will be killed before you even take off. They don't have a chance to take off with that. So now, I think the only additional thing that, in my view, regulators should really monitor is really the cybersecurity, is the system stability, and I think that's about it. Quite luckily, I think in Hong Kong, I think the insurance authority do get it. They are pretty hands-off for you to really try things out and iterate the product, and which is why I think going to this year, we start to see really that so-called explosive growth really starting to happen.
The regulatory support or environment to drive adoption is obviously very important. Depending on who you speak to in the industry, they do have different views. Obviously, if you go to, so you're focusing on insurance, let's go back to the virtual banks again, right? One of the obvious things that the VBs are talking about is really enhancing at their core the whole digital experience, right? The customer experience and the product ranges for their customers. So, Casey, how are the VBs doing this, and what challenges do you see them facing along this kind of a journey?
Well, take Welab Bank as example. I think Welab Bank's central proposition is that we can help our customers solve their financial journey problems. When we actually talk to our customers, we talk to many of them. These are people who tend to be younger, but not really young, but just younger professionals and so that. I think a lot of these youngest people, they are not happy about the existing financial services because they feel like they do not really get much information from the existing financial institutions. They feel that the products, if you want to buy a product, they don't understand the products, and sometimes the banks are just selling them the products because it's good for the banks. So now, I mean, I think there's a gap of information gap here. And I think when we are thinking about the proposition for Welab Bank, it will be trying to really provide the information. And because of the interaction that we have with the customers on the app, so we know them quite well. We can establish a relationship with the customers so that we can actually help them, give them advice. I think our central proposition is to become an advisory bank. So we advise them on how to save money, how to grow money, how to invest the money. And then that really bridging the information gap between us and then the customers. And actually, now you mentioned the adoption being slow, but in our situation, we find that a lot of customers are really interested in opening up account with us. And they really want to try it out. They really want to play around. They really want to get information. And so we are helping our customer build the products. In terms of the digital experience, now Welab has the experience of making loans already in our lender affiliate. We actually see that digital platform can be very efficient in giving out loans to customers. So we feel that when we're doing the banks, we can also come up with a lot of loan products that the customers will like. More importantly, I feel that we can actually come up with a lot of wealth management, investment products. Not fancy one, but generic one. With low cost, that will be good for the consumers. And that's where that's where the central proposition is.
Okay. How about Kyan, a bit more on the challenges, right? What do you see as some of the key challenges for the VBs and the insurers going forward in terms of being able to succeed, right?
Yeah, this is exactly one of the questions we asked our respondent in the study I mentioned earlier on. If I may, I like to actually share with you a slide kind of summarizing the view. Not so sure. I will try to share this slide. Can you see this?
Mm-hmm. Yeah. Mm-hmm.
Okay. So one of the questions we asked the respondents is can you use just one word or one phrase to describe the challenges of virtual banks and virtual insurers? So they can respond either in English or in Chinese. So I drew the word cloud summarizing all the responses. As you can see here, the Chinese and the English version very consistent. So basically, the perceived challenge for virtual bank and virtual insurance in the mind of the public at this point in time is security, safety, and trust. Now, but this also applicable to traditional banks and insurance. So this is what at this very early stage of the virtual banking insurance industry at this point in time. And of course, this belief will change over time. We also ask in one word or one phrase, what are the success factors for the new virtual entries? And again, I drew the two word cloud. So very consistent again. The public is looking for convenient ways to conduct transactions, innovative products. Basically convenience and innovation. They're looking for. So compare with the previous slide. So these are, I would say, competitive necessities. So to compete with the incumbents, I think the virtual entries need to make sure that the public have the perception and believe that they are safe. They can be trusted. And at the same time, to differentiate themselves from the incumbents, they need to offer innovative and also a very convenient experience for the customers. So just two slides to share with you.
Okay, fantastic. I agree that, when you look at things around security, that is fundamentally core to the ability to win trust. I mean, those themes are very interrelated. I guess if we go to Zhiguo and we expand on this, you were talking about open banking before, maybe regulations. What do you think is, are there any potential challenges? Maybe what could go wrong in this space, right? What is really holding back the ability for this to succeed in terms of the hurdles to cross?
Yeah. So I recently working on some academic papers on this issue. Now, the academic paper is typically would like to make some policy relevant suggestions. And when I read the open banking, the idea behind it is to basically level the playing field between the traditional bank and the challenger bank, that if I may use Casey's word, and basically saying that, look, if you want to introduce someone to challenge it, you have to open the same data to the outsiders. Okay. And apparently without regulation, most people will say, no, this is what I worked for many years, and why would I give it to you? Okay. And obviously we know this is the kind of a protection is bad for the society. It's numerous around of the, and ex ante, there's some other effect, but I do think that it's a good idea to force the traditional bank to at least open its API, open the bank account. It's like a GDPR in European. It says that the data of those customers, the existing banks cannot prevent the customer not to release their own data to other challenger banks. Okay, so once you have that, then I do think that the regulators should be careful a little bit in the following sense, is that do not underestimate the current challenger banks' ability, especially given what we know, all these very, really advanced technology in using the existing data, etc. I saw many cases with my reasonable imagination that once the challenger banks, given that they already gain market power on their daily life, social media work, all this data, combined with the existing traditional bank data, then they might gain significant information advantage over traditional banks. And that's not itself the problem. The problem is that once you have that, then it's possible to change the existing bank's behavior in the sense of giving out the loans, trading strategy, etc. And the using standard information type of a logic, you can immediately derive certain conditions. Actually, if you do that, if you force other people to come in, force the challenger bank to come in, and you have all these so-called winner's curse, because once I know that if I giving out the loans, only loan that are left over are those other people's don't want, then obviously initially I don't want it to making out too much of a loan. So that's kind of the careful things that regulators need to think about. The second thing, really quick, is that the regulator, of course, need to think about the privacy. And the privacy thing is very interesting in the sense that we do not have a very clear definition for that. And in the context of open banking, I do think that privacy very much will be related to the ability to pay. Think about it. Who care about the privacy when I share my information in making out a loan? Must be those guys who actually knows that they're going to pay. Okay, so those type of essentially basically saying that whoever care about the privacy are those people are essentially good in the sense that they are thinking about the payback, and that interaction has important implications in thinking about.
Okay, yeah, I mean, look, open banking and the idea to create platform and data sharing, it's all well and good. I think we've seen through various examples, such as something like a shared KYC utility, right? If you all know, when you set up an account with a bank, they pretty much ask you to do the same kind of process at every bank. So the idea is, well, how do you create a centralized platform so you don't have to duplicate this over and over? The one thing is, while it sounds so conceptually obvious, there's major issues around who owns it, who's the first mover, who wears the risk. And banks are notoriously, and financial institutions are actually notoriously competitive with each other, right? And the one thing that they like to maintain, you would call provenance over, is their own data, right? Because that's really their secret sauce a lot of the time, especially if they're using it in the right way. How about the people side? Let's step away from the technology and the business model, and let's focus on something like talent. Kyan, I know you look at this kind of issue in quite a lot of detail. What's your view on the kind of supply and demand dynamics of fintech talent in Hong Kong? And what kind of skills do fintech professionals really need to bring to the table to succeed, right, and to thrive in this industry?
Yeah, there's a big gap, in the talent market of fintech. There's huge demand, but the supply is very limited. We did a study about 6 months ago to understand the gap between the supply and demand and what kind of skills are really needed by the industry. We also look at the formal training of fintech from local universities. It turns out that this year we only have 150 undergrad or master degree holder in fintech going to the market. And this number will go up to around 500 in 5 years' time. So very, very limited supply. We also find that at the senior management level of company, the senior executive, they are more aware of the impact of fintech and what technology can help the company to transform. But if we go down to the operation level, which consists of the bulk of the employment in the financial industry in Hong Kong, only 1/3 of them they are aware of the impact of fintech to the company, to the bank or insurance company. So there's really a big need to actually upscale the knowledge at the operation level. This is something that I think the industry as a whole, maybe financial industry association, can really help to in a relatively short period of time offer training courses or short executive programs to really boost up the knowledge and the competence level of the workforce. In terms of the specific technical skills required by the industry, cybersecurity is ranked number 1, followed by AI, data science, blockchain, and design thinking. So these are the skills that are in hot demand. But not just the technical skills. We talked to many senior executives in the financial industry. They also think that the soft skill, the soft side, management skill, communication skill, is equally important, if not more important. So we see a situation now. There's a strong demand from both the traditional finance industry and also the fintech sector. And there's really limited supply at this point in time.
Fair enough. Yeah, I mean, when it comes to, I don't know if everyone notices on this call, but when you go on LinkedIn or you go on Facebook or Instagram and or whichever social media that you're on, and you see these posts about Harvard, MIT, every uni offering short courses that are very much customized towards addressing an understanding of AI or blockchain. So there's a lot of modularization going on in terms of education delivery. But I agree, beyond the technical, people forget that fintech is often still the journey of people. And a lot of what happens within this is transformation, and the skills needed to drive team and transformation, as well as design thinking in the approaches to rallying troops behind the technical cause, is often what people forget about, right? There is a huge people element to move along that journey. How about you, Casey? Maybe any perspectives, or Alvin or Jirgua around this?
No, absolutely. Again, what you said, I totally agree. When I think about fintech, of course, Kyan is absolutely right. We are dying to hire more people who can do the technology side. Especially AI. We just don't have enough of them. But I think in terms of the fintech, it's really about transformation. It's really about getting people who understand how can we do things better. So, Kyan, you mentioned design thinking in talk about talent shortage, and I actually for someone like myself who is not a fintech guy, in any sense, right, but by upbringing, going into a place where I can see people doing design thinking, talking about the first principle, how do you actually create value, is really refreshing. I wish a lot of people in the industry, not only in finance but in various industries in Hong Kong, adopt the same kind of mindset, trying to really using technology to help us to do innovation. I feel that in Hong Kong, the innovation, the idea of innovation is embraced by too few people. We need more people to really try their hands, on changing, the way we do things around, in Hong Kong.
Yeah, very true. Alvin, anything you want to add?
Yeah, well, maybe I can share a little bit about how we hire people.
Yeah.
So, like for us, in fact, OneDegree got people with 8 different types of passports. And that is how, I would even call it as desperate in looking for talents. So we really look for talents around the world and bring them to Hong Kong. In fact, a number of them are Hong Kong returnees, like used to work in Silicon Valley and other places. That's one. 2 is especially when it comes to product people, digital product people, that is extremely difficult to find. Surely because in the past there is really no such function in this market. So we really have to bring them to Hong Kong, and then we train up the younger folks. We actually send them to other markets and really go and learn about it, and to get the experience about it as well. So this is how we deal with the talent side.
Yeah, that's fair. I mean, that's the thing. It's all new, right? One of the jokes I had is when we were looking to support one of the VBs setting up in Hong Kong, right? One of the virtual banks. The question I got asked is, have you helped a virtual bank set up in Hong Kong before? And I said, no one has. Like the question is counterintuitive, right? We're all new to this. That we can only give you the best kind of examples of how we can go about this process. So it's true. It's all very new, and the technology is so rapidly moving and evolving that, the knowledge curve is quite steep. Zhi Guo, is there anything you want to add to this around the talent gap? Or, I'm sure you're producing the best and brightest people that attend your lectures, but notwithstanding that, I do think, the talent and skill sets out there are in need of a revisit, so to speak.
The only thing I want to add is that obviously is the students pushing professors, not the other way around.
Okay.
That's very clear. And I feel that at least on this front, the mainland universities, etc., is doing better. I feel.
It was interesting because I actually saw a piece the other day. Google is actually launching its own kind of Google Careers courses, right? 6-month courses, and let's say UX or, data analytics. And the idea is, can we, package a 4-year uni degree and then pop you straight out in the workforce after 6 months of doing this? I mean, that's how specialized the tech skills are getting, right? But again, I think I go back to and resonate with all of your points around the need for the soft skills, especially around change, design thinking. The process of change requires a lot more than tech. I'm mindful of time, but maybe we can touch on it because it was raised early on in the discussion around like a crypto account, a trading account with a virtual bank, right? One of the things that obviously everyone thinks about when it comes to fintech is cryptocurrencies a lot of the time, right? It's it's the evil child or the wonderful future of fintech, right? And everyone's trying to work out what the next frontier is. And what we're seeing obviously in this space is we're seeing the rise and fall and ongoing rise again of Bitcoin, a number of other cryptos, but now it's to the point where central banks are starting to dabble in the idea of their own central bank digital currencies, right? So this really creates a very different dynamic around what does the future hold? Because if you can develop this could be the common language of finance in terms of supporting transactions and payments and so on. I know from a research specialization, Professor Zhi Guo, you have some views around this, particularly in relation to perhaps the DCEP in China. Do you want to share some initial kind of thoughts around this and what you think the outlook is for the central bank digital currency space?
Yeah, so okay, in a way that I've been, following this blockchain and cryptocurrency since the first uptick move of the Bitcoin. All these things, like people's attention gets attracted when you see something dramatic. So that was like 2015 or 17, 2015. And afterwards, things get back to normal when people dive into it. And then also that the Libra, and I believe that the Chinese government or PBOC has been working on it for many, many years, like starting 2014, 15. So this is something that they already were working on. But the launch of the thing obviously is pushed out, is pushed by the Libra introduction. In all these political side, Ben is asking me about the future, etc. It's just a too vast topic that every single dimension can be devoted by, let's say, maybe 3-hour lecture, that kind of thing. And this is why it's so fascinating. So if you want to just me to say one thing about it, I've been in Hong Kong. I see many people very interested, excited about this opportunity. You should be, but I still say that in the end, you need to find a good application for the virtual currency, and that's going 30 years from now, think about it, are still, if you just having something just based on the payment, ultimately just payment, trading for payment, that's not going too far. That's what I want to say. And the CBDC is a totally different animal. This is why it's a central bank. You're not central bank.
Fair. I mean, what about UKC? Do you think the central bank digital currencies will take off? Do you think CBs in other parts of Asia will start to promote their own digital currencies after China's lead? Yeah.
Well, I think clearly we are really watching China taking a lead in this space with a lot of interest. I can sort of speculate why Chinese central bank would might want to use it because the whole country is already going on digital payment. But those entire digital payment is relying on private companies' effort. So it might make sense for the central bank to provide another sort of central bank virtual currency, so that people can still make their payments digitally and still using a currency that's issued by the central bank. So I think it sort of makes sense. I think for China, and I don't know where if virtual currency are issued by central bank in China, the question is where will the market share be in terms of payment, right? 几个淘宝的 payment. How much transaction will be done in the digital currencies issued by central banks, and how many will be done in the other private 钱包, the private wallets. And I suppose there would be some kind of a segmentation. Maybe certain transactions that are very small, small size will be using central bank currency. And then given the competition among financial institutions, including all the electronic wallets, they will try to provide enhanced services to their customers in using those transactions. So there may be some kind of a market for the private wallet, and in coexistence with the central bank digital currency. So I think that would be where I see things are. I think it's very interesting because China is carrying out an experiment. I think we're all watching it to see how it plays out. I think for a lot of countries, they could be interested in seeing how this works. You mentioned Libra. It didn't work out because it was really sponsored by private organization. I feel that central bank currency need to be supported by central banks or quasi-government organizations in order to succeed. And I think a lot of governments may be interested to see how this plays out in China. Now there is an argument to be made for central bank issued currency because a lot of the foreign a lot of cross-border transactions currently are still not very efficient. So I'm not talking about small retailers. I'm talking about bigger trade finance kind of transactions. They're still not very efficient. So if you have some kind of a virtual digital currency, that may lower the cost. And I think a lot of potential banks may take a look and see how China does it and see whether there's any kind of need for doing something else. But I think this space will not grow very fast. It will take a while.
Yeah, it's like I always find the crypto space fascinating. Everyone talks about the institutional wave of adoption, which still hasn't come. The infrastructure that needs to be built around it. I mean, the whole concept of Bitcoin when it was created was to work as an alternative to fiat currency, right? An alternative to bypass it, where you could transact and facilitate that negotiation of payments between one another on something that you didn't have to use something, overseen by fiat. But you can see the adoption of that how has it evolved? A lot of cryptos have evolved in terms of a speculative asset. All the businesses around trading and investment of it have boomed, but everything around the actual adoption from a payment perspective and use case, that's been harder to show progress. So it's really quite an interesting space. Very, very curious to see how this will pan out, because a lot of people are arguing with all the QE going on at the moment, with all the money printing, with people losing faith in currency, right, and just cash. Is this the opportune time for the revival of crypto and central bank digital currencies to kind of step in?
But the central bank digital currency is really another form of government's money.
Yes.
So another form of fiat. There's no difference.
Exactly. That's the thing. It's like you're stepping in. And one of the things I used to joke about is everyone would challenge the value of fiat and say, crypto is the way. And I know CDBCs is just another derivative of fiat. It's just in digital form, right? But I always thought, if you really value your crypto so much, how come you always describe the value of your Bitcoin in terms of what it's worth in US dollars? Because if that's your anchor point for the value of this translating back to the real world, there seems to be a disconnect for how you can use your Bitcoin in other areas. So the language that you're speaking is still fiat when you proxy the value for your crypto a lot of the time. But yeah, central bank digital currencies are designed to, I guess, just address some more of these issues around broader adoption. I think what we're going to do right now is open up to a bit more Q&A. I know there were some questions coming through during that session. One of them is in regards to, and Casey, it might go back to you actually, the opportunity, risk, and challenge of VBs moving from servicing personal banking clients and retail to more the SME and the corporate space. Is there an opportunity, and what would be the challenge of attacking that end of the client segment market?
I think the VBs can do well in the SME space. Again, the SMEs, would really welcome, better banking services, lower costs, and so on. But of course, the prerequisite of that is there will be some kind of information that the virtual banks can really get access to in order to, to evaluate, to really assist, in making financial lending and so on to the SMEs. And I think the AML, is still a problem with doing SMEs. So there are obviously for consumer banking, is the easiest lower hanging fruit. SME would be more difficult depending on whether you have a special data, access, or a platform cooperation. Into corporate banking would be hard. I mean, corporate banking is really need a lot of, human touch and a lot of institutional knowledge and trust. So it will be harder for BBs.
Fair. Let me just go down and have a look at some of these other questions. How can traditional insurers / banks play the big catch up against virtual players? Oh, the perennial question around innovating a large incumbent versus, a smaller player doing it. Any thoughts around this? Maybe Alvin, from your perspective, if you compare yourself and your operations, traditional insurer, are they treating you as direct competition? How are they trying to position themselves? How are they playing catch up?
Well, I guess right now, virtual insurer is still fairly small. Like, for example, when we do it, we really don't try to get into the mainstream segment, but we really try to innovate new segment like pet insurance, logistic insurance, and all those. So what we have seen is that, among the traditional insurance company, a number of them are pondering to set up second brand. Okay, so this is a common theme that I've seen in different markets. I think that's one. Yeah. Second area where we see companies are really trying to get innovative are those who acquire new or enter new markets. So we have seen a lot of new entrants. Well, a lot of those new entrants are not necessarily completely brand new companies, but even traditional insurance company going up to China, for example. Now, China has really opened up to foreign investments, right? So there are at least 3 insurance companies who got the full license. Those guys are really starting to think about, now when I go into this market, I don't want to just use the old system, old way of doing things. They really want to take the leap and then be an innovative guys.
Any other perspectives, maybe from Kyan, Jugo, or KC around, how do you see the traditional incumbents responding or playing catch up? I've written a lot about this and researched a lot myself. And often I find cultural and mindset barriers are the main issues, as well as incentives. The whole process of being innovative is often something that large firms try and implant in themselves, but they don't quite get it right. So just wondering if you see that as a fundamental difference that they're trying to catch up on, but they're not quite succeeding at.
I think I expect strong competition from the traditional players. I think we're seeing that. So I would not, I have a lot of respect for what they're trying to do. I think the only thing I would say, hopefully, is this will differentiate. The virtual banks will be that we're very focused. We're very focused because this segment that we are working on is really the kind of business that we want to grow. Whereas if you compare a virtual bank or virtual insurance versus the traditional institute, players, they have there are many segments of the business. So they may not be as focused as we are in terms of bringing digital experience to the customers. I would just say this is one of the differentiation.
I'm seeing a lot of price matching going on, and HSBC will step forward and do zero fees itself. Do you think this kind of war and response between the incumbents and the virtual players will end up being a race to the bottom? Do you think it would be a good thing, or do you think it's fundamentally going to impact the sustainability of the long-term business models of these organizations?
Actually, of course, we were seeing some kind of reduction in rate and so on. I would not call them a price competition because ultimately the consumers are not buying something purely on a basis of price, and also finance is a regulated environment. So we won't. I don't think we go to a race to the bottom kind of mentality. What the banks are doing in terms of cutting the fees, minimizing the fees, is good. It's what we've been doing. So I think it's wonderful. But I don't think that would be our position. So in terms of how we offer our customers a value, we think better service and better understanding is really the way to go.
Okay. I'm just mindful of time. Maybe, Zhiguo, do you want to add to that?
I just want to ask if anybody can share some perspective on the potential merger. The first thing as academia, once Ben raised that question, we'll say, no, this is clearly the first order effect will be the existing guys. They have money, and they don't have the talent, they don't know how to do it. Okay, let's just buy you. So why does it not? To me, that's a very good way of dealing with it, and the regulators obviously need to watch on that because otherwise it creates all this monopoly, all these things. But this is the way to go, I feel. So maybe someone who is at the industry side, let's say Alvin, have you been approached by some big guy?
Companies knock on the door for various different things, for investment, for potential acquisition, for collaboration. So this happen quite frequently, to be honest. But I think the key of that to me is about how can you really create impact. I think the mentality, the mindset of the companies, whether they let you stay independent and really maximize the impact. I think that's the key. So typically, if it's very small and you already start to think about getting acquired, that is not a good sign. So I think it does take you to really go through some curve before. I think that. Well, otherwise, I think it would just kill the innovation.
Yeah. Often it's nice to sit back, let other people build it, and then just buy it, because often it's too hard to do it yourself as a large, complex incumbent. Working on digital transformation sometimes with the largest banks is quite a painful task. All right. Well, look, I'm just mindful of time. So why don't we finish up in this way, right, from each of you, because it kind of answers a question that has come through. What do you believe, maybe in one word or one sentence, is one of the biggest challenges for Hong Kong in taking the fintech industry to the next level and being the next Silicon Valley or, the next hub? What do you think it is that Hong Kong really needs to address? I know, Kyan, you spoke about talent. Maybe Alvin, it's about mindsets and behaviors. again, I don't want to influence, but maybe we'll just go around. From my perspective, if I had to say it, the thing holding us back is, I think there is a mindset issue. I've always found Hong Kong was a bit of a peculiar place because it's so small and convenient that like going to the bank is like going downstairs, right? So you see it is almost like, do I need to go online? And there's this stickiness around mindsets to change over behaviors. It's a very cash-driven economy as well, right? People still rely on a lot of these things. But that's one of my views, a mindset and culture to get people in the right frame of mind. How about you, Alvin? Maybe we start with you. What do you think?
I still think it's all about people.
Yeah.
It's about talent. We make things happen. I think that's it.
Yeah. Yeah. Okay. Zhi Guo, do you have any views here?
I wouldn't say I'm a native in Hong Kong, and I don't think I'm very suitable to answer this question. Right. But let me make one point.
Sure.
Is that why that nowadays when I go to Hong Kong, when I take taxi, do I need to still use cash?
Exactly.
Is it still cash?
Yes.
Some.
How?
And in some sense, that just reflects the government. There's something wrong with the government or regulation. And I always thought that the one advantage of Hong Kong is the government.
Yeah.
Make it very open, make it, it immediately adapt all these things. So I wish that, that is the advantage to let the virtual bank or these fintech to flourish.
Yeah. Sometimes this inertia against change, right? How about you, Casey? What do you think?
I think the challenge is size. We are a small place. So I think there are a lot of people in Hong Kong who are very innovative. We want to find new services, but we're still a very small market. So I think, and Hong Kong has a potential to be not just a fintech center for Hong Kong, but clearly a fintech center for the Greater Bay Area, Greater Power China, and also for the rest of Asia, because we have the International Financial Center. So having that combined with fintech, we can really provide services to a bigger market. But right now we are small. So I hope that we have more breakthrough in terms of opening up in other markets, that will allow Hong Kong fintech players to serve a bigger segment.
Yep. I think from a B2C perspective in particular, that does create challenges, just natural population limitations, right? And finally, how about you, Professor Kyan? What do you think?
Yeah, I'd like to echo you and Alvin. Again, talent is the major challenge. Every invention, innovations come from the mind of the individual. So if you have the right talent, the right individual, wonderful things can happen. You mentioned about mindset. I think mindset can change quickly. Given the pandemic, I started to use food delivery. I never used food delivery before. Now almost every day, every day now. Because the Clearwater Bay is so far away from many shopping districts, so I have to call Panda to deliver my dinner. So things can change very fast.
It's funny because I often find mindsets only start to change when you're forced, right? And if there's anything that's fundamentally forcing people to change, COVID is that catalyst, right? It's amazing when you say you can't teach an old dog new tricks, but when you literally can't eat, unless you adapt your mindset rapidly, you'll be surprised what you can pick up when you're pushed to that situation. Okay, well, look, I just want to end there. Mindful of time, we're just running a little over. It is 9:35. So just from my perspective, want to thank all of our speakers today. It was a really interesting discussion. Appreciate your perspectives coming from academia, virtual banking, insurance. There's a whole bunch of different views that we've covered when it comes to talent, opportunities, the challenges, both internally, externally, mindset. Really interesting debate and discussion. And I think that, hopefully as the attendees on this call, you took a lot away from this session. You found it informative and very useful. So a big thank you to all of our speakers, as well as Helen, HKUST and University of Chicago for putting this co-branded and co-sponsored event on. Over to you, Helen.
Thank you very much, Ben, for the wonderful session. And I want to thank all the panelists for sharing a lot of your great insights, both from the academia and also from the industry. And I wanted to say that we really appreciate tonight. We have over 250 participants online from the Zoom platform, and also several thousands, participants out of our China platform. So we are very excited that a lot of your insights are being shared with over several thousand people in total. And we really appreciate HKU, on behalf of HKUST, we really appreciate our partnership tonight with the University of Chicago. And we do look forward to further collaboration going forward. And I wanted to thank Professor He Ziguo, waking up early in the morning to join us here. So next time around, we will switch. We will do another session again where, we have to wake up early in the morning for you. How about that?
Great.
Thank you so much, everybody. And I also want to, thank all our wonderful audiences, for, joining us tonight with the sessions. So we would like to hear back from you about this webinar. Please complete a simple survey by scanning the QR code now on the screen. Yes, please scan the QR code on the screen. Thank you very much. Have a wonderful evening to all of you in Asia and around the world, and Chicago, of course.
One final thing, Helen, I might add, it's a shameless plug, but for those of you who really want to get in and understand more about the fintech industry, meet the key players, whether they're startups, the incumbents, have a look at Fintech Association of Hong Kong, ftahk.org. Go on the site, find out a bit more. You can always sign up as members, particularly student members. Have heavily discounted rates as students. So it's a great way to learn more about the industry right from the heart of the professionals. Okay.
Thank you.
Wonderful.
Yes, every one of you, please join in. Thank you. Have a wonderful evening.
Okay. Thank you.
Good morning. Thank you.
Thank you.